And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show as we head into a long weekend. Let's take a look at what happened in the markets last week. And we do continue to see volatility taking shape. We had some pretty impactful economic data coming out. I'll share that with you. And then also we're going to take a look at ways that you can capitalize on names that reported strong earnings last week and then pulled back with the markets and are beginning to resume their uptrend. We'll look at a lot of other areas as well. As usual, this is all about helping prepare you not only for next week, but beyond. So let's go ahead and get started with some of the headline news that did drive price action last week. In the beginning of the week, we did see that job openings fell to a 28-month low as the U.S. labor market appeared to be cooling off. That in turn did help push interest rates lower, which of course, as we know, is good generally for stocks, particularly for growth stocks. We did also get news that consumer confidence cooled off quite a bit, and we're still in that phase where bad or certainly weak economic data is viewed as positive news, all about having the Fed and ideally having them put a pause on their rate hike campaign. Now, we did get information also about the private employment data front, and that came from ADP on Wednesday. And that also showed that hiring activity was cooling. So net, that employment data was coming in very good. Today, it was confirmed because we did see the government come out with numbers for August, and they cited that the unemployment rate jumped while new jobs cooled off. So net, very good news there. We also did get core PCE inflation data. Now that was a little more mixed, where it came in really at levels that it's been at for a while. Nothing alarming, but ideally at some point in time, we will want to see those inflation data numbers begin to recede. The Fed has made it clear they want to get closer to that 2% level. We are not near there. So net again, investors and certainly traders are now leaning a little more toward the possibility of the Fed putting a pause on their rate hike at their meeting later this month. Next week, we do get factory orders, consumer credit numbers, not a whole lot by way of impactful news, which means that the markets will pay quite a bit more attention to any companies that are potentially reporting earnings. We're certainly at the tail end, but that impact remains. So from here, let's go ahead and take a look at the S&P 500, the Nasdaq, and get a feel for where we closed for the week. And again, with anticipation toward what we can look potentially toward. And here we are with a daily price chart of the S&P 500. And last week, we did have a very bullish earlier period in the week where the broader markets on Tuesday broke back above this key 50-day simple moving average. And for those of you that follow William O'Neill's work, Investors Business Daily, you'll also know that this day was rather key because it posted what's called a follow-through day, which is and oftentimes will signal a near-term bottom in the markets. There's still a bit of a cautious tone out there relative to not jumping in 100%, but certainly very constructive. We also did see the RSI close up here above that net neutral 50 in positive territory, and likewise with the stochastic. So net near term, the broader markets are in a nice confirmed uptrend. Let's go ahead and take a look at the Nasdaq, and you'll see very similar price action by way of that index closing above that 50-day simple moving average, positive RSI, positive stochastics. And those of you that subscribe to my MEM Edge report will know that we have been including this daily chart in the report regularly, primarily to highlight those characteristics that signal a new uptrend that took place in mid-March, similar to what we saw on Tuesday. So again, also here in the growth and tech-heavy Nasdaq, which was up 3.3% relative to the S&P, up about 2.5%. So from here, we're going to take a look at those underlying 11 sectors in the S&P 500. This is all about getting in front of potential sector rotation. You want to uncover and understand where that current strength is emanating in the broader markets. And as always, so that you can participate in that strength. So let's take a look up here at the forefront and energy. And the energy has been faring quite well, but we did get quite a boost today. I'll share with you the price of Brent crude oil, but there are other factors at play. And primarily it is supply demand, and it's an area with, again, my MEM Edge report. We did get into a relatively overweighted position, and we have several names on that suggested holdings list that are capitalizing on this strength within energy names. Nice gap up into a base breakout with positive momentum signals. Up here at the forefront as well, XLB, this is the material sector. And I am going to be covering this a little more heavily, if we may, today, because this is indicative and typical of what we've seen in given industry groups that really marched to near-term highs at the end of July, pulled back, and now are coming back into favor, resuming their former uptrends. I will share with you why and also share with you some names. Here we are with that MACD crossover, black line up through the red into positive territory. Moving along to good old technology up here at the forefront, up 4.4%. And certainly from my work, the leading sector and leading sub-industry groups within there, all about earnings. We're going to get a little bit more into that as we move through here as well. And another area that is just beginning to move up here to the forefront is financials, XLF. Take a look, that RSI just getting into positive territory. We can also see that MACD black line up through the red. This past week, Morningstar did increase their outlook for the economic growth in the US, and financials often will benefit. You'll see that particular group leading. And as we move forward, I'll share with you another area that leads during periods of potential underlying, certainly at least confidence that the US economy is moving forward. Now, down here in the weakness area, you want to be aware of the fact that it is these primarily defensive sectors. This is REIT stocks, healthcare, XLV, consumer staples, and utilities. So in case you didn't realize it or feel it, there is and has been a rather pronounced move back into a risk-on environment. So from here, let's go ahead and take a look at some of these underlying sub-industry groups that really can be quite helpful as far as giving you a sense of what is shaping up in the broader markets. I use ETFs, and then this 2-month daily price chart view, RSI, and we're sorting it in descending order. So up here at the forefront, one of the reasons that technology is faring quite well is software stocks. This is IGV, the ETF for software, and it was up 4.6% this week. And we can see this nice move into positive territory, that nice bullish MACD crossover, and then also a positive RSI. We're seeing very good earnings reports from select companies that are coming out. But the other driver here is the fact that interest rates are coming down. And these really high growth software stocks do tend to be very sensitive to that. So let's go ahead and move forward. Here's Brent crude oil up here at $86, all about supply demand issues. In particular, we are seeing supply. There was a big drawdown in crude inventories for the week ending August 25th, and other factors as well that are pushing the price of oil, which in turn is helping those energy names. Also of note here is the fact that small caps moved back into positive territory, not quite as decisive as the other indices, but small caps were up 3.7%. And this is that other area that I mentioned can fare well when there is talk of the US economy, certainly at least smoothing out and then faring better. And also taking a look here at that yield on the 10-year, here's that pullback that I talked about that came in light of general economic and employment data that was flat or weaker than anticipated. We did get a little bit of a rally today. There was citing short squeeze there as well. But at the end, we did end at about 4.2%, which certainly is better than the recent 4.5% level. Now, also one other area I talked about financials. This is on my watch list, KRE, and these are regional banking ETFs. We, of course, had that banking crisis earlier in the year, a rally here that we did take advantage of with my MEM Edge report, exited, but now back on the radar. You can see this RSI trending upward into positive territory. One quick note here is there's been quite a bit of talk of seasonality and the fact that the period in September is really quite difficult for the markets. So what I'm sharing with you here is a view of the Nasdaq. It's going back over the past 5 years. In each of these months, it tells you what percent over that last 5-year period did this in particular Nasdaq close the month higher than it opened. And we can see a very clear-cut 20% relative to these other stronger periods for the Nasdaq. But of note, this is only taking us back 5 years. And of course, that recent 22 bear market is going to weigh quite heavily. So I am going to go ahead and draw this out a bit and take us 20 years out. You can do that by dragging this to the left, and it will take into account other market cycles. And you can see going back to 2003, the Nasdaq really is 50% of the time it did. And certainly, again, smoothing out and going longer term will provide you a certainly more of an overview of that view. So moving along, let's take a look at some of these earnings. These companies that came out with earnings responded quite positively, pulled back with the markets, and are back into uptrends. First up here is CECO, environmental company. I'm going to pull up a full quote because from here we can take a look and you'll see it's a small company, about 500 million. So I'm going to take us to a larger, better known company. This is Roku, ROKU. And here we are with that gap up on earnings. Nice continuation rally. It did get into an oversold position, but since then, here we are with that pullback. It's not really showing a lot of momentum, but certainly characteristically, it's moving back above these moving averages. We're poised to get that MACD crossover. So it's certainly an example of what is taking place in the broader markets. Up here is Micron Technology, MU. Here's that gap up on earnings, pullback. Now this does have more by way of momentum. And by that, I mean it's moving above these simple moving average. Take a look at those volume characteristics here. Nice high volume. And then the momentum indicators moving into positive territory. A couple of other names that I can share with you, and you can certainly run screens if you are inclined. You will want to look for names that came out with earnings above estimates, and they are beginning to reverse the downtrend. So here we are with Ethan Allen, ETD. Here's that gap up on earnings, pullback. Again, a little early here on that potential downtrend reversal. Next up, Wayfair. And here's that gap up on earnings, pullback, and then we can see that it is in the throes of reversing that downtrend. So ideally, keep an eye on those volume characteristics. You want to see volume as that stock begins to form the right side of the base. Now, the last name here is a company that did, in essence, execute that downtrend reversal. It's Elf Beauty, ELF. Here's that gap up in the beginning of August. this pullback with the markets, and now we've resumed that and actually reached that prior high in price. Now, also what's happening in earnings, those companies that have really reported more recently, we're seeing a little bit different price action because the broader markets are turning positive. So as an example, here is Intuit. They reported last week. I'm going to go ahead and add a 5-day simple moving average. And you can see this is the response to their earnings last week, a nice base breakout, super nice volume, and then this continuation rally. So we are seeing that quite a bit. And these are software stocks. This is OK, TA, software security, gap up on earnings, and then a nice continuation rally. So from here, I will share with you a stock that actually is exhibiting those same characteristics. This is Veeva Systems, a software company for the healthcare, health sciences industry, gap up into a base breakout. So keep your eye on those earnings and you can potentially participate in some of these names. I also did want to talk to you and share with you a view of these home builders. Now, we did have interest rates pull back last week. That was constructive for the group because mortgage rates, of course, would be impacted and lowered. Here's XHB, the home builders ETF. Pulling back here, this is in line with what we've been viewing as far as a turnaround shaping up. Nice MACD up into positive territory, and then also nice high volume. Now, we also did hear an earnings, or actually, in this case, it was the company announcing continued growth. This is Toll Brothers Home Construction Company. And let's take a look because it's a very constructive looking chart by way of experiencing this pullback with the industry group, also with the broader markets. And then more recently, this turnaround, certainly over the last 3 days, breaking back above that 50-day simple moving average, positive momentum, nice high volume. And then most attractively is this black line up through the red into positive territory, which in turn has helped the stock execute a nice base breakout. And I can tell you from experience, this is a company that has done quite a bit of building about a mile down the road. And I'm on their email list and they seem to be constantly selling out. And these are homes that are going for 2 to 3 million and up. So definitely still a market out there for these new homes that are being constructed. Now, as we look at home builders, there's another way that you can participate in the continued interest in new home sales, and that is taking a look at companies that provide products, whether it's steel, wood, even HVACs, really all across the board. First up here is CMC. This is commercial metals. I'm going to go ahead and pull up that full quote again so we can get a full flavor here. The stock has a 1.1% yield, but take a look. This is that pullback to the 50-day simple moving average and into a nice uptrend and breakout. Take a look at that MACD crossover. And this company is a steel producer. We talked about XLB. That is the basic materials group that did fare quite well last week. Here's another builder, BLDR is the ticker symbol. And again, very similar. Here's a actually pretty sharp pullback, pretty big volume, but we can see the recovery. This is a company, I'm not sure why the full quote is not sticking there, but this particular company does provide building materials. And we can see again that nice downtrend reversal shaping up. A company here that is also in that building space, NX. And here we are with this huge advance on earnings that pushed the stock out of the base. The company came out with numbers that were 50% above estimates and actually very good, strong earnings, nice high volume here. And then again, that same characteristic with the momentum being pushed into positive territory. Last up, I will share with you a cement company, EXP, Eagle Materials, pullback with the group, but again, advancing here with a nice base breakout, nice high volume, and then positive metrics on that momentum. And from here, I do want to share with you some other areas that are and were on the move last week. Certainly, retail names have been not so great this year, or certainly very, very mixed. But here we are with XRT. This is the S&P 500 retail ETF. And you can see that it had a period last week where it is in the throes of potentially reversing this downtrend. The group was up over 4% for the week. So I'm going to share with you a couple of names that stand out, particularly larger cap. And first up here is Walmart. You can see that the stock was a little sloppy here. They reported their earnings about 2 weeks ago. The initial response is this negative red on very big volume. And then the stock recovered the following day. There was a reconsideration, and it is a company that I follow very closely, but it has been tough to own. We did, with my MEM Edge report, we're able to take advantage of some of these rallies, but then you can see where it would falter. The company has really been pivoting by way of using robotics in their some of their back areas as far as delivery and otherwise, and then also pivoting in response to high inflation and the way that they attract new clients by way of their pricing. So here we are with this base breakout, a little bit of nice volume there yesterday on that breakout. And then from here, we're going to take a quick look at an intraday chart and get a better feel. This is a 15-minute. I don't use this chart that often, but it can be helpful in uncovering names that initially pull back into the open. This is today's price action. And then as the market or the day progressed, buyers came in on the dip, so that at least on this 15-minute, we did end in positive territory. So that certainly is constructive. And then another company, actually a bellwether in this area, is Amazon. And we can see here is the company's gap up in response to earnings. It did pull back quarterly to that nice 50-day simple moving average. And then the price action over the last 2 days has this MACD poised to cross black line up through the red in a bullish fashion, in line with a move where we're on the lookout for a nice continuation rally, potentially into a base breakout. Another area with Amazon that had an announcement relative to the fact that Amazon Prime is going to be offered using their platform. And this is Shopify, SHOP. And the company is one of the largest retail software platforms. And we can see here's a gap up going back to earnings this period. More recently, not so good on that earnings response front. But here we are in response to the news about their partnership with Amazon. Gap up above this 50-day simple moving average, pushing that MACD up there into positive territory. And one last name that did report earnings, it's a company that I've certainly been involved in the past, is Lululemon. I'm going to pull up a longer term price chart here. Actually, we will need to go to a monthly. And this particular stock was a big winner coming out of that 2020 bear as market, as individuals were staying at home and really embracing their athleisure wear products. They did fall out of favor here. So this is taking us back to the fall of 2022. So we're in the throes of potentially breaking out of a 1-year base with this nice black line up through the red on the monthly. Not a whole lot in a way of momentum, but they did report earnings. We're going to go back to a daily chart here, and you can see a little bit sloppy, but that's the beauty of that monthly chart. It really smooths out all of these hiccups here. But we can see that the stock did execute a gap up into a base breakout, nice high volume into positive momentum. And that's it for this week. Everyone have a fantastic long weekend. If you like what you saw, go ahead and hit that like button. And if you haven't already, trial my twice weekly MEM Edge report. I actually put out an additional Tuesday alert report last week. Very, very involved as far as getting you in front of these not only sector rotations, but stocks poised to benefit the most. Have a great weekend. See you here next Friday.